here is the Excel portion of the exam. So Anne invested $75,000 to open her company. As you can see here, we have a cash deposit of $75,000. So that's increasing the cash account by $75,000. So that's our debit. Now we need a credit, which is Anne's capital of $75,000. Alright, so we have a debit, which is our cash account, and our credit, which is Anne's capital account. Alright, transaction number 2. Anne pays $15,000 for sporting goods inventory. So cash is coming out of the cash account, and Anne is receiving inventory, which is an asset, of $15,000. So our debit is our $15,000 increase in inventory, and our credit is our $15,000 decrease in our cash account. Right? So then we go to transaction number 3, and we see that Anne purchased display equipment for $12,000. So we have our equipment increasing by $12,000. That's our debit. And we have our cash account decreasing by $12,000, which is our credit. Number 4, Anne pays rent on the company's retail location of $1,500. So we have $1,500 cash going out, and then our expense is our credit. Is our debit, which is $1,500. So our expense is our debit, and our cash going out is our credit. Transaction number 5, Anne purchases $750 of supplies and $2,000 of furniture on account. So we have our supplies account and our furniture account being impacted. So we have $2,000 in our furniture account and $750 in our supplies account. Now these are our debits because these are our assets, so they're a debit. We have furniture worth $2,000 and supplies worth $750. And she purchased it on account, so that means she didn't pay cash for it, so she owes $2,750 for the furniture and the supplies. So the accounts payable account increases by $2,750, and that is our credit, and it shows that we owe $2,750. Alright, transaction number 6. Anne opens for business, and on her first day, she sells $2,400 of sporting goods for cash, and the cost of the goods sold is $1,350. So here we have transaction number 6, so we have to have 2 slots for this. So we have our cash increasing by $2,400 because she sold $2,400 of sporting goods for cash, and the cost of the goods sold is $1,350. So cash increases by $2,400, and you see sales revenue is our credit here. The cash increase is our debit. Sales revenue is our credit. And then if we look down here, our inventory decreased by $1,350 because we had a cost of goods sold. So we paid money to have that inventory. So it's the cost of goods sold that we paid for that inventory and to hold it in our facility. Alright, so our cost of goods sold is our debit because it's an expense. So it's $1,350, and our credit is the inventory leaving the organization, right? The $1,350 that left the organization. Alright, transaction number 7. The company pays $2,750 that was owed from the purchase of supplies and furniture. So our debit is paying off the accounts payable account, $2,750, and our credit is the cash going out of $2,750. Transaction number 8. On Ann's second day of operation, she sells $1,450 of sporting goods for cash. It also sells another $3,000 of sporting goods to a local school district on account. The cost of all the goods sold is $2,100. Alright, transaction 8. Let's look through this. So she sells $1,450 of sporting goods for cash. So we have a cash increase here of $1,450. And then the other amount, the $3,000, she sells it on account. So we see accounts receivable increasing by $3,000. And then we see our sales revenue is $4,450 because you add the cash to the $3,000 that's still owed to get sales revenue of $4,450. Now we got to look at our cost of goods sold is $2,100. So there's $2,100 of inventory going out. So what we paid to have that inventory. And our debit is our cost of goods sold here because it's an expense, right? So it's $2,100 under cost of goods sold. Alright, number 9. The company purchases advertising in local newspaper for $600. So we have $600 cash going out, and our debit is our advertising expense of $600. Now remember, it's a expenses and drawing decrease owner's equity because they are normally a debit. So that's why we decrease when we do a expense or a draw, and cost of goods fall under the expense category. So we have our debit of $600 advertising expense, and then we have our credit of the cash going out of the cash account of $600. Alright, transaction 10. The company receives $2,100 in partial payment for the sporting goods previously sold to the local school district on account. So we have cash coming in of $2,100, and then our accounts receivable decreases by $2,100. Right, so our debit is our cash increasing, and our credit is our accounts receivable account decreasing by $2,100 because we are no longer owed that. Alright, transaction 11. Ann pays wages of $1,600 to her employees. So we got cash going out here, and then we got wages expense on this side, which is our debit. So we got the wages expense, which is our debit, and we have the cash going out of the cash account as our credit. Transaction 12. The company pays a telephone bill of $135. So again, we have our debit, which is our telephone expense of $135, and our credit of the cash going out of the cash account of $135. Transaction 13. The company pays $200 for monthly utilities. Again, same thing, the utilities expense is our debit, $200, and our cash going out is our credit of $200. Transaction 14. Ann buys an additional $2,000 of sporting good equipment inventory on account. $2,000, so we have an increase in our inventory account of $2,000, and Ann still owes that money, so we have $2,000 under accounts payable account. So we have our debit of inventory, that's increasing our assets, and we have our credit of $2,000 under accounts payable because that's increasing our liability account. All right, last one. Anne withdraws $600 from the business for her own personal use. So we have our debit of $600. Anne's drawing. She's withdrawing it from the organization, so it's decreasing owner's equity. And we have our credit of cash going out of the cash account. Now, what I want you to learn how to do is to put these formulas in Excel. So if you did not put the formulas in your Excel file, you'll lose points. If you want to send that to me with the formulas in your Excel file, you can send that to me and I'll give you the points for that. Alright? So here you want the formula. You want to put equals, sum, parentheses, and you want to highlight all of these transactions in the cash account. Then you click enter and it adds all those for you. Alright, and you do the same thing all the way down. So I have the same formula for accounts receivable, all the transactions under accounts receivable. And when you do this, it adds up to 900. Alright, so you do the same thing all the way down, and that's how you input the formulas. Now, I really want you to learn how to use the formulas because this is a good skill to have when you get out of college. When you go to work somewhere else, you'll be able to have some Excel skills, which are very needed in today's world. Alright, so then when we look at if our assets equal our liabilities plus our owner's equity, so we line up these. So our assets equal sum of all of these accounts here, right? And when we hit enter, they equal $75,765. Now our liabilities are only this accounts payable here of $2,000, and our owner's equity equals sum of all of these owner's equity accounts. Okay? So revenue and expenses impact owner's equity. And we get $73,765. Now when we add these two together, liabilities plus owner's equity, we get $75,765. So our assets do equal our liabilities plus our owner's equity. So our basic accounting equation is in balance. Our checks and balances are balanced out. Now one thing I want to note is our part of owner's equity is expenses and revenues. However, revenues and expenses are on the income statement. And when you take revenues and subtract your expenses from your revenues, you get your net income or loss. And net income or loss go into your owner's equity. So you're not going to see revenues and expenses actually on the owner's equity statement. You're only going to see your net income or your net loss. Alright? And that's the end of this part. If you have any questions, please email me. And like I said, if you did not get the full points for this assignment because you didn't put the formulas in, you can send that to me by email with the formulas and I'll give you the points for that.